Good evening, everybody. Welcome to the session. I hope you all had a great weekend and thanks for joining for the session. So today we will discuss about the current market status. Everybody is thinking about the market is very bullish and it will continue to be bullish. Nifty will currently, which is around 22,000, will reach 23, 24, 25K. Nobody is thinking about the lower levels. Everybody is thinking about higher levels only. So we'll see what the actual situation is, what the charts are saying, what is happening in the global market on the different global indices, what is happening. And then we can basically draw some conclusion or we can come to some inference, right? So that's the context for today. So let's start. As I said, I mean, nobody is talking about 20K, everybody is talking about the higher levels. People are expecting that the current government in India, BJP, is going to get a good majority, which is, of course, mostly will happen. And Fed rate reduction is also on the cards, mostly in March or high possibility in April. So with that possibility, there is a high chance that market should go up. That is what everybody is logically thinking. So Nifty is doing good. Bank Nifty has been quite weak for last 2-3 weeks, 3-4 weeks. It's almost red. So whether Bank Nifty will continue to go down or whether we should look at buying some banking stocks. So that also we'll see. So let's move ahead. So before we move, I want to share this quote. Okay. People are still joining. In bull markets, we are blind to risks. In bear markets, we are blind to opportunities. So what it means is, in bull markets, everybody feels that the bull market will continue without any stop. Non-stop, the bull market will continue. There cannot be a fall. Okay, that is what everybody feels. And that's human psychology. Similarly, in bear markets, if the market is down and down, people feel that, okay, it's going too much down. So there is no point in buying. So as Warren Buffett says, when everybody is greedy, it is time to be fearful. And when everybody is fearful, it is time to be greedy. So something similar, this quote is also saying that in bull market, we should be careful about the risks. In bear market, we should look at the opportunities. So fortunately, or for the people who are always bullish, this is a bull market. So we don't have to look at the bear market situation. But all said and done, we have to look at the risks. What are the risks going to be there, or what are the risks there in the market currently? So one should be always conscious about it. I hope everybody is okay with English. I mean, I'm going to talk in English and Hindi. If anybody is having a challenge, I can get to Hindi completely. Everybody okay? Can somebody just comment in the chat box? Okay, it is fine. Thank you, Gerald. Cool. Okay, let's move on. So one interesting data I wanted to show you before we get into this further details. So what this slide is showing is basically the years when SPX made all-time high. Okay. Now this is a very interesting data, and how we interpret it is it's up to us. But then with some perspective, we can get some direction from it. Now, if we look at 1929, I mean, most of us know that in 1929 there was a Great Depression and US economy was in big trouble, huge trouble. So in 1929, it made all-time high 45 times. What it means is that 45 times it crossed the previous high. And in a one single year, there were 45 times all-time high which were made. And after that, there was a severe crash in the market. I mean, when I say severe, we cannot imagine the severity of it. And we can see it on the charts. For almost 20 years, 23 years, it was not able to cross the previous all-time high. So for 23 years, the market was not able to cross the previous all-time high. So that gives us some idea about how severe that fall must have been, or how severe the bubble must have been. I mean, in a year, if it has made 45 times all-time high. So after that, maybe the market stabilized, and maybe the government or the Fed there might have done some certain things because of which the market did not get overhyped, but still the patterns continue. Okay, now if we look at here from 1989, continuously for 12 years, the market made all-time high. And after that, 1, 2, 3, 4, 5, 6, for 6 years, it was not able to make all-time high. The reason I am showing this slide today is we are in a similar pattern today. From 2013 to 2024, for last 12, 13 years, market in SPX, I mean the global market, in the US market specifically, is making all-time high for last 12 years continuously. Something similar happened from 89 to 2000, and after that for 5, 6 years, the market was flat almost. So if we go by the past, maybe after 24, it is quite possible that the market may remain flat for a long time. I mean, not necessary it will remain, or not necessary it will remain for India market, because India market is slightly doing better, or is doing better compared to the US market or Europe market. But all said and done, if the Europe market is going down or the US market is going down, India market cannot remain unaffected, and we have to keep this in mind. So let's move on. Just wanted to give you a perspective. So we'll analyze today SPX, gold, dollar, what is happening in SPX, gold and dollar. I always look at this indices, what is happening in the S&P, which is the major index in US, what is happening in gold, what is happening in DXY. We also look at WTI, or the crude oil. And then, of course, we study Nifty and Bank Nifty. But only studying Nifty and Bank Nifty is not going to give us a clear picture. Considering the other factors, what is happening on the global indices is also equally important. So we'll study this. We'll look at some stocks, and then at the end, I will take some Q&A also. So let's head to the charts. We'll start with Nifty. Okay, so we'll start with the longer time frame. I mean, I hope most of you know the trading view side and the basic charting. So we are looking at the weekly time frame here. Okay. Let me enable Bollinger Band. Okay, now if we look at Bollinger Band is one of the technical analysis or technical indicators. Nifty is close to the upper range. Upper range is like around 22,700. So, and it has been making higher high. I mean, it touched in October, there was a dip, we all know. And after that dip, the market started rallying again, and it touched the Bollinger Band upper range first time in November. And after that, it is making continuously higher highs. Now, obviously, this has to stop somewhere and it has to reverse somewhere. So where it can reverse? So as per the Bollinger Band indicator, around 22,700, it should or it can basically reverse. But is it necessary that it will go to 22,700? We can look at some other factors. So if we come back to the shorter time frame, now these are all trend lines which are drawn on shorter time frame and higher time frame also. So if we look at the higher time frame trend line here, around 22,200, or you can extend it to 22,250, there is a very heavy resistance. Now, why we are calling it as a heavy resistance? Because it is possible that it will make a triple top here on daily. So summary is that as per this particular chart, Nifty ideally should not cross 22,250, or maybe in a highly bullish scenario, 22,400. So 22,250 to 22,400, this is a very strong resistance area from where Nifty should reverse. So how much can it reverse? That also we can see. So very recently, 24th of Jan, it touched this trend line, right? EMA. These are EMA lines, this pink line and the yellow line. So on the daily, there is a support around 22,250 or 22,300, you can say. So first support will be around 21,300. And if that goes at all, then it can go all the way up to 19,900 also. So this is what we are looking at for Nifty. The support range on the shorter time frame is around 21,250 to, or the range for shorter time frame is 21,250 to 22,250. On the higher time frame, the range is 20,000 to 23,450. So this is what the charts are showing. Okay, but this is for Nifty. Now let us look at Bank Nifty. Now Bank Nifty, as I said, has been heavily bearish. So if we see Nifty, it is above this pink line. Okay, strongly above the pink line. That will give you a perspective of how much bullishness or bearishness is there in Nifty and Bank Nifty. Whereas Bank Nifty has been below the pink line. In fact, it touched the yellow line on 24th of Jan. Whereas Nifty has not touched the yellow line for a long time. After October, it has not gone close to the yellow line. So that shows a lot of weakness in the Bank Nifty. It is because there is a lot of weakness in the private banks. Although the PSU banks or government banks are doing good, but the private banks like HDFC Bank, for example, the major part of the banking index is down. So because of which it is continuously going down. So how much low it can go? Again, we can look at it. So as per the higher time frame trend lines, we can look at that there is a support for Bank Nifty at around 44,700. So if 44,700 goes or is taken out, it can go all the way up to 43,900. Can it go higher? I mean, can it recover? Well, it is a very volatile index, and 1,000 points, 2,000 points movement in a day or two is also possible in Bank Nifty. And it can go all the way up to 47,900 also. So if we look at the range for Nifty and Bank Nifty, Nifty range we already discussed. For Bank Nifty, the shorter time frame range is around 44,750 to 46,100. And on the higher time frame, the range is 43,900 to 47,800. So on the shorter time frame itself, we are looking at a range of around 1,500 points. And on the higher time frame, the range is around 4,000 points. Now, obviously, the question will come in everybody's mind that if the ranges are so high, how do we trade this market or how we invest in this market, right? So that is where your strategies come into picture and how you are doing the risk management, diversification, and order management that will help you to navigate such kind of large ranges. There is some question here. What is yellow line for? There is a question from someone. Yellow line is basically EMA. It's an EMA 201. Okay, it indicates a longer time frame support. So pink line is a medium time frame and yellow line is a longer time frame support. So we have to look at multiple factors when we are looking at support and resistance. If you see here, we are looking at a combination of EMAs and we are also looking at the trend lines. So there are other factors also which we can see. I mean, I cannot go into detail of each and everything in the interest of time, but then there are various factors we have to consider. I'm just showing you how we can use the EMAs and the trend lines. So this is what Nifty and Bank Nifty is showing. So there are multiple questions which are coming up. We'll take these questions at the end. Otherwise, it will disturb our flow right now. So park your questions. We'll discuss. So we looked at the Indian market. Now let us look at what is happening globally. That also needs to be considered. So let us go to SPX. Okay. Now this is a 3 months chart for SPX. Each candle is representing one quarter. So if we can see here from October 2022, it's continuously going up and up and up. So there was a similar rally from after COVID for 1, 2, 3, 4, 5, 6, 7 quarters. It went up, and after that, for 3 quarters or almost for a year, it was down. So similarly, I mean, if we draw the analogy, it is reaching top. Okay, the market is reaching top, and in a month or two, possibly, we should see a high, and from there, ideally, the market should start cracking. This pattern which is formed here, if you know what are the patterns in technical analysis, this is the ascending channel pattern. Ascending channel pattern is a bearish pattern, and once that pattern is completed, and once we see a break of that pattern, there is a huge fall. Something similar happened here also in 2021, and something similar will happen in 2024 also. So there is no reason to believe that this pattern will fail on such a higher time frame. Let us look at smaller time frame, 1 day. So again, this is close to resistance. So it's very much close to resistance around 5082, or let's say 5100 is a strong resistance area for SPX, and from there it will give a fall. So it need not give a big fall immediately. Probably it will consolidate in this area, but we may not see a strong rally in the coming weeks. On a weekly basis, if we see, again, there is a huge run up from January for last 1 month, and probably till Tuesday, Wednesday, the market might remain bullish or neutral, and after that we might see a fall. But there is a high chance that next week, the week after coming week, will be bearish. So all indicators are showing that the markets, Indian market or US market, they are reaching the top. If we look at the fundamentals or the macro factors, in India, the election results are going to be in May, and everybody is factoring that BJP, the current government, will continue. They will get a good majority and they will continue. Normally, what happens in market is that in anticipation of the event, the market already goes high. So that event is already factored in. So there is a high possibility that in February itself or towards March itself, we will see a market top. And after that, for 3 months, 6 months, the market can remain low. That is possible for Indian market. Similarly, if we look from the Fed rate point of view, the Fed rate reduction, so far we have always heard Fed rate hike, Fed rate hike. The Fed rate reduction is expected in March, or there is a high possibility that it might happen in April. If that doesn't happen in April, the market will crash big time. But the possibility of not happening, the possibility of rate reduction not happening in April is very less. At least 0.25% rate reduction in April is quite possible. So by the time that rate reduction happens, this SPX will have already rallied a lot, and from there the market will fall. So that's what is the chart showing us. If we look at some other factors like dollar, for example, now dollar index is a index very important for India market, particularly because as India is a net importer, if the dollar index increases, the rupee appreciates and our import bill increases. So always it has a negative impact on Indian market. So dollar has given a breakout. Okay, breakout means it has started rising, and it's quite possible that in coming weeks it will keep on rising and it will go all the way up to 108, 109. So if that happens, it will have negative impact on the stock market, India market also and US market also. If we look at the rate, the bond yield in US for 10 years bond yield, it is giving a mixed indication. Not sure it is going to increase or fall further. So we cannot take any conclusion from here. But dollar is quite bullish, and it relates with the fact that the stocks are also near the top. So here I will pause for a moment. If there are one or two questions, I can take it. Any question here? Okay. So we'll summarize these levels. We discussed about Nifty, Bank Nifty, SPX, what is happening in DXY. We can study gold and WTI, also the crude oil, but not very necessary right now. So the range that we are looking at for Nifty, you can make a note of this. Currently, Nifty is at 21,783. The narrow range that we can expect for next week or so is 21,250 to 22,250. Now, not necessary that 22,250 cannot break. Possibility is always there, but I will give it a 25% chance. In case it breaks, we can look at 23,450. If 21,250 breaks, then there is a high possibility that Nifty will go towards 20,000. Similarly, for Bank Nifty, the narrow range is 44,750 to 46,100. If 46,100 breaks, then it can go towards 47,800. If 44,750 breaks, it can go towards 43,900. So this is the range we can look for Nifty and Bank Nifty, and accordingly one can adjust his or her trades. Going back in the December analysis, I had shared some buy calls for stocks. I had shared buy calls for Poonawalla Fincorp, JSW Energy, Persistent, Linde, India, and Tata Elxsi. In the three trades, Poonawalla, Fincorp, JSW, Persistent, buying was also done and target one was also done. So these three trades were already successful. The two trades for Linde and Tata Elxsi, these are live. Both the trades are still live. I mean, stop loss has not hit. Also, the targets are also not done. These trades are live. Just giving an example of what type of trades we take. These are just some sample trades. We give many more trades in the RGS Alpha group also. So we look at some important Indian stocks or the stocks which are talk of the town. Everybody is interested in these stocks currently. I can take one or two more stocks. You can share it in the chat box if you want me to analyze. So let us look at YesBank first. Who all are interested in YesBank, can you just put it in the chat box so that I know you are following the charts? Okay, our one friend is following it. Views on Hudco, please. Okay, we'll look at Hudco also. Fine. Sale. Okay, we'll look at Hudco and Sale, these two stocks, in addition to what I already shortlisted. Okay. So let us look at S-Bank from a higher time frame first, because what it is doing is that it is giving the trend of last 3-4 years it has broken. So it is important that we look at it from the higher time frame point of view. So here in the process, you can learn some technical analysis also. So Yes Bank, as I had mentioned in the RGS Alpha group, had a very strong resistance around 27, and it broke 27, and then we could see that it made almost another 20-30% height, almost touched 33. So 20% from 20 level of 27. So it has given this breakout of 27. So till the time it remains 27, it will go higher and higher. So if I have to buy S Bank, I will buy at the current level also. 30-31 also I will buy, and if it comes to around 27, I will buy it again, and I will keep a stop loss around 21. Now you will feel that 21 is a very heavy stop loss, but then the market is volatile and you have to keep a deep stop loss. If you are buying at 27, you can do some further buying around 24, and there is a heavy possibility that from 24 it will jump and you will get opportunity to book some profit. So that's how you can look at S Bank. So net it's bullish. Definitely it's buy on dips. No harm in buying at the current levels. But if you are buying at the current level, buy small quantity. If you are already holding it, just keep a trailing stop loss. Maybe if, I don't know, if somebody's buying level, let's say is 15, for example, there are a lot of people who have bought it around 15 rupees and they're already in handsome profit. So you can keep a stop loss or a trailing stop loss. You need not sell it right away. But if somebody is buying fresh, you can buy small quantities currently and add as it dips. So that's all I can say about Yes Bank right now. Let us look at another stock, PayTm. Now, PayTm is the talk of the town. Everybody is eager to buy PayTm. Many people say that ये बहुत गिर गया है और कितना गिरेगा अब नहीं गिरेगा. So again, I had mentioned in our group that it went to almost 400, and obviously from 400 it give a pullback. I mean, if a stock is falling so much, 25%, 30%, 40%, so pullback is natural, and it gave a pullback, and a lot of people got trapped here. So I'm sure a lot of people might have bought PayTm above 500, and now they are trapped, and now it is back to 400. Okay. So typically, when a stock is falling too much, you have to wait for reversal. Now, reversal can be in different ways. I will show you one very simple reversal identification way. Okay. If you go to MACD, MACD is again one of the technical indicators. So just wait for this MACD to become bullish. Okay. Now, PayTm was falling earlier also in 2023. And after this MACD became bullish, it gave a good rally. I mean, from the levels of 600, it went all the way up to 800. So if I have to suggest, I'll just wait for this reversal here. After this reversal comes, then you can buy. Now that reversal can come at a higher level also, or it can come at a lower level also. I mean, it might so happen that from here it will start rallying, and you might end up buying at 800. Okay. So instead of buying at 400, it is okay to buy at 600 also, because from 600 it will go to 800. But buying at 400 without reversal, it is possible that it can go to 300 also or 200 also. So waiting for that reversal is very critical. So currently it is not a buy. I will suggest let it stabilize, let it reverse, let it give some bullish indication, and then one can look at buying it. I mean, people are taking a lot of risk and they are buying it or getting into it with an assumption कि भाई और कितना जाएगा, अभी नीचे नीचे नहीं जाएगा, या 10% 20% प्रॉफिट ले लेंगे. So that's not something you should do with such type of risky stocks. Let us look at HDFC Bank again. Exactly opposite. Very, very strong brand name. No regulatory issues. They are doing decent in the business as such. Fundamentals are strong, but the stock continues to keep on going down. It is still down. So again, it's a similar pattern for HDFC Bank. If I have to buy HDFC Bank, let us look at what is happening here currently. The pattern is quite bearish here. It gave a reversal on 29th of Jan, towards the end of Jan, but it is again about to go down. Okay. So I will say HDFC Bank is bottoming out. It's not going to go too much down from here. Maybe towards 1350, 1300, it might go down. But one can start buying now from in the range of 1300 to 1400. That's what I can say about HDFC Bank. So if somebody is able to buy around 1300, 1350, definitely you will get levels of 1500 or 1650, 700 in a period of 6 months, 1 year. Provided the overall market doesn't crash. If the overall market itself crash, if Nifty goes to 19,000 or 18,000, then the stocks which are not doing currently, they will fall further. So that again, you have to adjust as per the overall market condition. But given the current market condition, which is a bullish market, even if it becomes neutral, 1300, 1350 should hold for HDFC Bank. That's what I can say. Let us look at SBI again. SBI is a strong PSU stock and doing good also. So very interesting. SBI is at the very strong resistance zone. Okay, just like we saw for SBI, for Yes Bank. '27 was a strong resistance zone for Yes Bank, and after that it just rocketed, went very high, very fast. So there is a similar pattern developing for SBI. So this 725 zone is a very strong area for SBI. If it breaks this 725, then it can go all the way up to 900,000 also. But let us see how it happens, how it moves on Monday and Tuesday. But if it crossed 725, if it remains above 725 on a daily basis, then definitely one can look at adding, or if somebody is not carrying it right now or holding it right now, you can look at buying also. But definitely it's a buy on dip stock, doing very good. So no harm in accumulating at the current level and keep on buying on the dips. So we have looked at S-Bank, PayTm, HDFC, SBI. Let us look at some other sectors. Reliance, again a market heavyweight. Again, very similar pattern to SBI. So these are heavyweight stocks like SBI or Reliance, and these are close to all-time resistance. Okay. So what it indicates is that the market is close to the top. Whether the top will break or not, we don't know. I mean, I cannot say that it will not cross that level, but one needs to be cautious in such situations. And let us wait if it is crossing this 29 200, or let's say 2950 zone. If it crosses 2950 zone, then it can go all the way up to 3,300 or 3,600 also. But currently it is at resistance. Just like SBI, we have to wait. We'll have to see whether it is giving a breakout. So for SBI, Reliance, I will say buy on dips if it is falling from the current levels. It's little risky to add at the current levels unless and until it gives a breakout. Because if it has to fall, we can see what levels it can go if it at all goes down. So it can go all the way up to 2775 or let's say 2800. So 5% to 10% fall from the current levels is pretty much possible. If you are a long-term buyer, it's okay. But if you are doing some swing trading or if you are doing some derivative trading, then it becomes risky. Let us look at TCS. Now, TCS is from the IT vertical or different index. So TCS has given a breakout. It looks like a clear breakout and it's going higher and higher. And I guess if all remains good, the market itself doesn't fall and there is no fundamental problem with TCS itself, it's heading all the way up to 5400 or 5500 levels. So TCS is a buy. At current level also one can buy with a target of 5500, 5400. In next 3 months to 6 months time, we are talking about a 20 to 25% upside here. So definitely a buy. It can go down up to 3800. It's not, I mean, it is not necessary that it cannot fall or it will not go down, but overall it's quite bullish. It is staying above this resistance area of 4000. So with a stop loss of let's say maybe 3600, one can accumulate and keep on adding TCS. These are the stocks that I wanted to cover. Now there are requests for a couple of other stocks. Let us look at them. Hudco. So Hudco had made a top and it is consolidating. So if somebody is holding with good profit, I will suggest book some profit, maybe 50% of your holding, or keep a stop loss. From the long term point of view, it is okay, but then there is a possibility that it might go down up to 170. And if that 170 goes, it can go down all the way up to 130 also. So top is done. I will suggest caution and I will suggest if somebody wants to buy at all, you can wait for 170 level. And if somebody is holding with a profit, then you should keep a stop loss of maybe 190 or so. So that's about Hudco. It's already close to the top. Then there is a query about SAIL. SAIL again. Now this type of candles are okay, bull trap. So when this type of candles are made, it's a bull trap, means people get trapped into a stock and then it starts falling. So this was the previous resistance level for SAIL 127, 128, and it has remained above that for the month. But then it is very much possible that it will touch this level again. It can go all the way up to 125 or 122. So if somebody wants to buy fresh, he or she can look at buy around 122. I will not suggest buying currently, immediately. But yes, around 122 it can be bought, but then even 122 can break because this pattern is not looking very convincing. The patterns like SBI or patterns like TCS, they are quite convincing, whereas this pattern, it is little uh, indecisive. So caution is recommended for SAIL. Then there is a last question for Bajaj Finance. Bajaj Finance is again in similar situation to HDFC Bank. It's falling, quite falling a lot, continues to fall. There was a strong support at 6800, which is gone, so which is a very bearish indication. And now it can go all the way up to 6400. So I'll suggest to wait and watch for Bajaj Finance. Don't rush to buy. I have a template ready for Bajaj Finance. Let me load it. So it has broken this support, as I said. So let's wait for the reversal on 4 hours on MACD. So it has already reversed on the 4 hours. MACD has reversed. So what it indicates is that you can start buying small amounts as per the charts, but it can still go further down. So around 6,000, it should bottom out. So there is still a 10% downside. If somebody wants to buy from a long-term point of view, when I say long-term, 1 year to 2 year, you can start looking at buying it. Otherwise, you can wait for 6,000 levels also. Because if we see in the past, this yellow line was broken and then it went all the way up to this level. So similarly, this yellow line can break here also, and we can look at 6,000 level. So around 6,000, it's definitely a buy. One can look at comfortably buying at 6,000. The downside is not much, around 10% downside is there. One can look at buying. Okay, good. I hope I answered your queries on these 3, 4 stocks. I won't be able to take more stocks now. We can discuss it later, or you can put it in the group. So we discussed about the stocks. One important point or guideline which I always share is that whenever you are buying a stocks, no matter how bullish it is, you should always follow the 1:2 ratio. What is 1:2 ratio? You should always have buy one and buy two levels. If you are buying, let's say, 10 units at the buy one level, the buy two level, which is the lower level, there you should buy double the quantity so that your average buying price comes down, and with some spike in the price, you can book profit. Position size, never take exposure of more than 15% in one single stock. 5 to 15% should be your maximum exposure to one single stock. Always diversify, have at least 8 to 10 stocks in your portfolio. 10 to 15 stocks in your portfolio maybe, but do not over diversify also. Having more than 15 stocks is going to create chaos for you. One will not be able to manage. So 10 to 15 stocks is something which one should look at. Definitely look at, do not overexpose to one or two. I mean, there are people who put like a lot of money in 2 or 3 stocks. So that is not recommended. It becomes very risky and it creates a lot of problem if the market goes down. Always book profit at T1 and T2 levels. We always define these levels. I mean, if you want to refer to some of my previous trades, we have given here buy levels 7,200, 6,300, target 8,100, 9,000, and stop loss. So all those levels you can identify, and after identifying those levels, one should stick to them. If you want to understand all these things in more details, the technical analysis in detail, fundamental analysis in detail, how to do derivative trading, how to do future and option trading with different strategies. So we keep on having different trainings. So I'm organizing a detailed 1 day training on 25th of February. There is a whole day training wherein all the technical analysis, fundamental analysis, derivative trading will be explained in detail. So I suggest those who want to learn the things in detail, you are welcome to join that training. It's on 25th February in Pune. This is my Twitter handle. I suggest all of you to follow that. Many of you might be already following. Those who do not follow, you can follow. I keep on giving different market updates there. This is the QR code for RGS Alpha Group. Again, RGS Alpha Group is a group wherein we are giving continuous market updates. Various free trades are given. You can make money and benefit by just being part of this group. So everybody is most welcome to join RGS Alpha. Uh, in case you need professional help in managing your portfolios, etc. So RGS Consulting is offering various professional services. We have portfolio management services, advisory services, fixed return services, or fund management services. So you can contact me and discuss about this in detail. So that's it from my side. In general, if there are any more queries, I can take a couple of general questions, or we can wrap up this session. There is a question. Can you share the recording of this session? Yes, I will be sharing the recording. I will be putting it on YouTube also. Any other question? So the summary for today is market is reaching resistance levels, long-term resistance levels. So it's time to be cautious, and people who are having good profits definitely book profit. Sell maybe 25%, 50% of your holding if Nifty goes towards 22,400, 22,400. There is a question about gold bonds. What specific gold bonds are you referring to? Are you talking about a sovereign gold bond? Okay, yes. Sovereign gold bond, if you are looking for investing in gold for long-term point of view, it's definitely, I recommend to go for it. Sovereign gold bonds give you certain return on certain interest every year, I guess 2.5% every year, plus the benefit of the price appreciation of gold. Only thing is that there is a 3-year lock-in here. So if you are okay to hold for more than 3 years, definitely sovereign gold bond is a very good option if you are looking to invest in gold. So it's a golden option for buying gold. That's all. That's what I can say. Provided you are looking to buy it as an investment and for long-term point of view. So that's it from my side, friends. Thanks again for joining.